Welcome back to Strongman Personal Finance. Who am I? I am Christopher Bell, certified public accountant, long-term boglehead investor, handsome, irresistible hero to all you ladies out there, and a guy that hates the frauds and scumbags and losers on YouTube that pump garbage, worthless stunks on their fans. Now, it is my mission, ladies and gentlemen, to take down all of the frauds on YouTube that put out a bunch of worthless garbage and that will ultimately screw over their fans in the long run. Now, if you like me, if you think I'm funny, if you think I'm cute and handsome, then like the video, subscribe to my channel, and let's go ahead and dive into what we're going to talk about today. Ocugen Incorporated, another stunk that I keep seeing and hearing about. And I decided, if everybody's talking about this hot stunk, it must be something good and interesting, and potentially something to invest in, right? Well, let's go check it out, ladies and gentlemen. So I pulled up Ocugen Incorporated, on Robinhood. And in the last year, this stock has gone up 2,361%, which you all know, ladies and gentlemen, means you should just go ahead and buy it, right? Last 3 months, down 34%. Last month, down 26%. Last week, 35%. And the last day, up 2%. Now that is a parabolic explosion right there. But if you go out to 5 years, ladies and gentlemen, this company's down 94%. So, it looks like in August 31st, 2018, something very crazy happened to this stunk. Now, this is the problem with all of these, biotech research and development stocks, is that whenever they start developing something that, may lead to massive profitability, like maybe they find the cure to, I guess they're more of like an eye company. They find the cure to blindness or something, or they find a treatment for blindness. Well, when people hear about that, it causes massive enthusiasm. And when it later turns out that maybe they weren't able to do it, maybe their guesses were hyped up, maybe they aren't actually able to achieve what they thought they were. Well, you see these massive fluctuations, which is why I don't like biotechs. They're so speculative. They're so freaking risky. I mean, look at these massive changes. So you go back to 2016, July 2016, you see a massive run up all the way to September 9th. Like, it went up like freaking crazy. And then you see a massive drop, and then it stays flat, blah, 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 blah. And then it tanks again. I mean, it's freaking nuts, ladies and gentlemen. If you're going to invest in the stunk, you're taking a lot of risk, because you can quickly lose all of your freaking money. You might get lucky and the stunk explodes because they're able to patent and release a vaccine or whatever. But if you're wrong and you bought in and then it tanks 89% or whatever, you're going to get freaking screwed, okay? You need to be very careful with these stocks. Don't put it as a large percentage of your portfolio. But you know me, I like to go look at the financial statements, okay? I don't like hype and twinkly eyes and news articles that are trying to pump the stock. So let's go look at the financials, because that's ultimately what matters, ladies and gentlemen. So I pulled up the Form 10K for Ocugen. And the 10K is the company's annual financial report. And you should read these, okay? And I cover this in every single video. You can read about the business. You can read about the risk factors. You can read management's discussion and analysis. And most importantly, you can go read the financial statements. Now, let's go check out the business. Let's see what these people do. We are a biopharmaceutical company developing gene therapies to cure blindness. I didn't even know they were going to do that. But it kind of makes sense. They're Ocugen. To cure blindness and developing a vaccine to save lives from COVID-19. So they basically have three things in the works. They have a COVID-19 vaccine, a modifier gene therapy platform to cure retinal diseases, and novel biologic therapies for retinal diseases. Okay, it sounds like the same thing, the last two, but I don't know crap about biopharmaceuticals, okay? So take that with a grain of salt. They may be successful. Maybe they'll develop an amazing vaccine or the cure for blindness. But if they don't, and you invest in this company on the hopes that they will, you might lose all your freaking money. So, okay, so they go into more detail. COVID vaccine, modified gene therapy, novel, blah, 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 blah. So I was skimming this earlier, and they have a lot of like technical crap in here. So if this interests you, I guess you could read this. I mean, you probably should. But to really understand this stuff, you really have to be educated in this kind of material. I am not somebody that knows anything about science. Science bores the crap out of me, okay? I like numbers, and I like stonks, and I like accounting most of all. But this, I mean, I don't even pretend like I understand what they're talking about here. So let's see, for example. The inactivated COVID virus with Covaxin is manufactured at a biosafety level 3 facility and inactivated using B propiolactone treatment. What is that? I have no idea. And if you don't know, you're probably not a candidate to invest in this stock, okay? So yeah, they go through a bunch of crap. Look at these like viral strings here. They have a little syringe. You put the syringe in the string of colors and it changes the colors. And then you have some arrows and the colors change again. Okay, well, that's cool. But yeah, I don't know what they're talking about. Ooh, what is this? Got some human disease, a control mouse. That poor mouse. Woo! Man. Okay, this is all interesting stuff. I mean, it doesn't really interest me, but I mean, just because I don't know crap about this, I wouldn't invest in this company, and I really don't think the vast majority of retail investors should. Now, if you want to invest in this company because you want to YOLO, keep it to a small percentage of your portfolio, like probably less than 1%. But then again, if you just want to YOLO your life savings into this company because maybe they develop the cure for blindness, then you go right ahead, even though I think that's a dumb decision. So that's kind of what the business does. Lots of stuff if you're interested in it. You can check it out and kind of see what they're doing. Let's go look at the risk factors. What are the risks of investing in this company? Number 1, we have incurred significant losses from operations and negative cash flows from operations since our inception. We may incur losses over the next several years and may never achieve or maintain profitability. Okay, that's interesting to know. We have a limited operating history and no history of commercializing pharmaceutical products, which may make it difficult for you to evaluate the success of our business to date and to assess our future viability. So basically, they've never actually patented something and got it out to the wider world. So far, they haven't succeeded in anything, okay? I don't care how exciting their research is. We may need substantial additional funding. Sounds like they may have to dilute the current shareholders now, doesn't it? Or go into more debt. Okay. More funding. Raising additional capital may cause dilution to stockholders. See? Didn't I just frickin' say that? Raising additional capital may cause dilution to the stockholders. Okay? You want to be really careful if you buy the stunk and then they go ahead and issue like 1 trillion more shares, because even if it becomes a super profitable company, how much of those profits are you going to get if those profits are split between more and more and more shareholders, okay? Interesting. So I looked at the risk factors. I'm not really impressed right now. I mean, there's some cool vaccine crap and whatever research they're doing. I've never seen pictures in a 10K, or at least what is it? What was it? The lab rat or the mouse? I've never seen that. That's interesting. All right, let's go look at the financial statements. It's usually item 8. We're going to skip the management discussion and analysis. I don't want to read all that crap because I'm not investing in this company. But let's go look at the financial statements. So you're going to have the income statement, you're going to have the balance sheet, you're going to have the statement of cash flows, and you're probably going to have a statement of changes in stockholders' equity. Those are basically the main financial statements. The ones you want to look at, well, you want to look at them all, but I like the income statement, the balance sheet, and the statement of cash flows. Because changes in stockholders' equity, you can kind of figure that out from the other financial statements. So, okay. Who's the CEO? Shankar Musunuri. Oh, he's a PhD. Wow. Interdusting. All right, let's go ahead and look at the consolidated balance sheet. All right. So, first thing that immediately jumps out to me is a massive explosion in cash and cash equivalents from December 31st, 2019 to December 31st, 2020. They raised, looks like what, $15 million? And that probably came from debt or stunk issuances because they're not profitable. And asset held for sale. Okay, I think I saw this briefly on the income statement. So this $7 million right here, keep that in mind when we look in the income statement. But they basically had something they were going to sell, and then they didn't actually sell it. So it actually affected their profitability. All right. So total current assets divided by total current oh my God, I can't talk. Total current liabilities is your current ratio. So you want to look at that to see if the company is going to go out of business within the next year. So total current assets are $25.8 million, and total current liabilities are $3.6 million. So that's going to be well over 1. So they're not going to go out of business like in the next day or year, okay? That's reassuring, isn't it? All right, let's look at their liabilities. How much has their long-term debt increased? $800,000 of long-term debt, and looks like almost $250,000 of operating lease obligations. Okay, they're basically leasing equipment to help with their operations, so I wouldn't worry about that too much. Now, let's look at their stockholders' equity. This will show if they're diluting the current shareholders. So if you look at this column, or row, excuse me, it's the common stock row. So when you look at the common stock, if you see the numbers go up, that means they issued more shares. So they went from 527,467 of common stock, that was the balance, not necessarily the shares, to 1.8 million. So they basically more than tripled the amount of shares of stunk outstanding. That's very freaking bad. And I think that trend is going to continue because they're not even profitable. So the shareholders are getting massively diluted. But if you want to know how many shares they issued, you can kind of zoom in here. And it's kind of like hard to read. Blah, 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 blah. Authorized. All right, so you want to look at shares outstanding. It doesn't matter what they're authorized. It's what shares are outstanding. That's what shares are actually traded in the public. So shares outstanding at the end of 2019 were 52 million shares. And now it's 184 million shares. And the par value is 1 cent. Okay, whatever. Par value, it's just a random crap. Now, accumulated deficit, that's another thing you can look at. Now, normally a company has retained earnings where its profits stack up year after year after year, and they're not paid out as a dividend, so they're reinvested into the company. Now, if you look at their retained earnings account, it's actually an accumulated deficit, which means the company has been running consistent losses over and over again. Now, the accumulated deficit in 2019 was 51.5 million roughly. And then it went up to 73.3 million. So they had a pretty big freaking loss in 2020. So right now, they've just been bleeding money. I mean, it's not looking good, ladies and gentlemen. Cool. Let's go ahead and look at the income statement. 2019. How many revenues did they generate? 0. No revenues. Wow. No revenues, all expenses. Killing it. And then in 2020, they generated $42,000 of revenues. Wow. I make more than that in one freaking year. I made more revenue than this company. That's freaking crazy. Okay. So they had revenues of $42,620 in 2020. And their operating expenses, research and development. Now, this one right here, in-process research and development. So I actually read the notes, and what happened is they were going to sell this patent or product or whatever to another company. And what happened is the deal fell through, and they determined that the actual value of whatever they were selling was 0. So if we go back to the balance sheet, you can actually see, it's pretty interesting, they have an asset held for sale on December 31st, 2019 for $7 million. And then when they determined that asset was actually worthless, in a sense, they wrote it off as an expense in 2020. So that's going to be a one-time expense. So you kind of want to consider that and factor that in. Because if they didn't have that one-time expense, their loss from operations would have been roughly the same in 2019. So you always want to watch out for like significant events that only happen here and there. And you can almost, in a way, kind of discount them if it's not going to really impact the company in the long run. So with that being said, basically, if you discount that $7 million, then they had roughly the same loss from operations of $14 million, which is still freaking horrible, okay? All right, and then let's see what happened. They had interest income. They made $1,000 in interest income. They probably have money in like a savings account that makes 0.01% interest. And they had interest expense of $7 million. And the year, well, it actually went down. Their interest expense was $1.7 million in 2019, and then it went down to $720,000 in 2020. So I don't know if they like refinanced their debt or if they paid off a lot of debt or what happened, but their interest expense went down. So now we look at net loss to common shareholders. The net loss in 2020 was $34 million. That's including the write-off of $7 million. And the net loss, after all the expenses are deducted from their $0 of revenues, is $20 million. So, Jesus, man. You people, like, I'm not trying to be a poo-poo butthead, but you can't put your faith in these kind of companies because it's so subject. It's so random. You don't know what's going to happen. If you don't understand what's going on in this company and you just put your money into it because some clown YouTuber told you, because they told you an exciting story about how they're about to have a breakthrough and cure blindness. How do you really know that? And why would you trust a freaking YouTuber that probably doesn't even have a bachelor's degree in biology? Okay? You need to be careful. You need to read the financial statements, and you need to understand what's going on with the company. I don't know crap about science, and I still know this company is complete trash. And until they actually start making revenues and they actually bring a product to market that actually makes money, why would you even consider putting your freaking money into it? God. All right, so now we look at the statement, a consolidated statement of cash flows. So as you can see, it adjusts. The main thing is that $7 million write-off, that was a non-cash expense. So they actually added that back to the net loss for 2020. So you see the cash outflows, the net cash outflows for operations in 2019 were $16.8 million, and then they dropped to $14.7 million. So I'll reiterate this all the time. You want to look at both the income statement, which is the accrual basis of accounting, and you want to look at the statement of cash flows because they tell the same story, but they're different because the statement of cash flows focuses on the actual cash, okay? Because there's some expenses in accrual accounting that have nothing to do with cash, like writing off an asset they thought they were going to sell. Okay, so basically they're bleeding freaking money. They're not profiting. They're not selling anything. There's no revenues. I made more than this company in 2020. Woo, that's funny. Okay, and then you can look at financing. I mean, cash flows from investing activities, that's them buying and selling property, plant, and equipment. So that's usually going to be negative. So whatever. And then you have net cash provided by financing activities. So basically you can see net cash provided by financing activities was $25 million in 2019 and $31.6 million in 2020. So they're basically raising a lot of freaking money, and all the cash, all of their cash, except for a little bit of debt, $921,000. $37.8 million of cash came from common stock. So you're getting massively diluted. And the funny thing is, they basically it looks like they took the money from the common stock and they used that to pay off their debt, okay? So isn't that great? You basically invest your money in this company and then they just go and pay off a bunch of debt. So they reward the debt holders. Wow. Okay. So, yeah, massive share dilution, massive bleeding of cash, net losses, accumulated deficit. It's just horrible, ladies and gentlemen. Don't put your money in this company, okay? I don't care. I wonder if Meet Kevin has pumped this. I'm sure he has. I need to go check YouTube after this. Be careful what you put your money in. Read the statements. Please. Learn from my videos. I'm not even going into crazy depth, but I can see right off the bat, this company is a extremely high-risk company. Because a lot of people, they don't look at this stuff. They only look at clown, loser, scumbag YouTubers that don't know anything about how to read financial statements. But these guys, they just read articles and they're like, oh my God, look at the next hot 20x stock. Because some article, some fluff piece came out saying the stock was going to go to the moon. It's just horrible, okay? So don't ever buy into hype. Always look at the fundamentals. So that's it for today. Please like, subscribe to my channel, buy my book, Stop Being a Broke Loser. It's on Amazon for $3 for the ebook or $10 for the hardback. And yeah, it'll be a massive return on your investment if you buy my book, because I teach you everything about investing, insurance, and how to manage your cash, how to save money on college, children. I go into a lot of stuff. You think all these YouTube clowns do that? Of course they don't. Anyway, you guys have a wonderful day.